All right, let's dive into something that's super important if you have any financial ties outside of India. We're going to break down the official guide on declaring foreign assets and income. Yeah, I know it sounds a bit intimidating, but stick with me. We're going to make this simple and clear. So let me ask you something right off the bat. Do you happen to own stocks in, say, a US company? Or maybe you worked abroad for a little while and you still have a bank account open over there? Any property overseas? If you're nodding along to any of this, then yeah, you're definitely in the right place. So, the first big question is who actually has to do this? Does this apply to everyone? The rules are pretty specific. So, let's jump right in and look at the official definition to see who really needs to be paying close attention. Okay, so it all comes down to whether you're considered a resident Indian for tax purposes. And there's basically a two-part test for this. First, were you in India for 182 days or more in the last financial year? If so, that's you. If not, there's another way. Were you in India for 365 days over the last 4 years, and at least 60 of those days were in the most recent year? If you tick either of those boxes, then this applies to you. Now, here's something that is absolutely crucial to understand, because it trips a lot of people up. It does not matter if your foreign income is tiny, or even if it's way below the basic taxable limit here in India. The rule is simple. If you have the foreign asset or income, you have to disclose it. This is all about financial transparency. All right, so you figured out that yes, you do need to disclose. The next logical question is, what exactly are we talking about here? What do you need to report? Let's break it down into two main categories, your assets and your income. When we're talking about assets, the list is pretty comprehensive. You've got your foreign bank accounts, and listen, this is a key detail. This includes accounts where you just have signing authority, not just ownership. It also covers things like employee stock options or ESOPs, any property you own abroad, or if you have a financial interest in some foreign company or trust. And then, of course, you've got the income side of things. This means any salary you earned from a job outside India, rental income from a foreign property, any capital gains you made from selling foreign assets, and of course, interest or dividends from your investments. Basically, if you earned it abroad, it needs to be on the list. Okay, we've nailed down the who and the what. Now let's get into the nitty-gritty, the how. How do you actually go about doing all this? Let's walk through the process. The official guide lays this out in 4 pretty straightforward steps. First, you gather up all the info on your foreign assets. Second, you do the exact same thing for all your foreign income. Third, you'll plug this information into some specific sections of your tax return. They're called Schedules FA, FSI, and TR. They're just the designated spots for this stuff. And finally, you file your complete income tax return before the due date. See, totally manageable when you break it down like that. Now, I can almost hear some of you thinking, oh no, I've already filed my return and I forgot about this. Or maybe, shoot, I totally missed the deadline. Okay, take a deep breath. There is a way to handle this. For the 2025-2026 assessment year, you actually have until December 31st, 2025 to file what's called a belated return if you missed the deadline, or a revised return if you need to go back and add these foreign asset details. The key thing here is you have a chance to make it right. This brings us to our final, and honestly probably the most important section, the why. Why is it so critical to get this right? Well, the government basically presents this as a choice, with some really good reasons to comply and some very serious consequences if you don't. Just look at the two sides of this coin. On one hand, when you disclose you're playing by the rules of the Black Money Act, you can avoid getting taxed twice on the same income, and you get complete peace of mind. On the other hand, if you don't disclose, well, you could face proceedings under that same act, which could mean some really heavy penalties and even the risk of prosecution. The choice is pretty stark when you lay it out like that. And to make this really hit home, let's talk numbers. There's a penalty of 10 lakh rupees, that's a million rupees, just for failing to include this information in your return. That is a massive penalty for what could be just an oversight. And it doesn't even stop there. On top of that huge flat penalty, there are more penalties if you provide inaccurate information. And in the most serious cases, they can actually initiate prosecution. The message from the tax department is crystal clear. The risks of not complying are just not worth it. We've covered the big picture here today, but if you want the really detailed step-by-step guides and all the official information, the tax department has made it easy. You can just scan these QR codes right here to go straight to the source. So we'll leave you with this final thought. Is your global financial life in order? taking care of this stuff is more than just a tax thing. It's about making sure you're on top of your game as a global citizen. We hope this explainer has helped give you the clarity you need to get everything sorted out. Thanks for tuning in.